As markets try to recover from this week's bloodbath with Microsoft, Meta, Amazon, and Apple reporting earnings, there's one specific stock that kind of outperformed everyone else, but I want to explain why. So Root, as of today, is kind of just break even. It's not really doing much, and we really don't know where it's going to go. But yesterday, that was not the case. So Root ended up reporting earnings, and it went from $40 per share to highs of 118. For those that do not know, that was nearly a 200% ROI. If you look at the overall lows to highs, it's a 191% ROI within just a few hours. Now, there's nothing, in my opinion, that justifies a stock skyrocketing 190%. But it's always important to look into of what acted as a catalyst to create so much momentum to send the stock to new all-time highs. This was the stock that I shorted yesterday. If you're part of my LPP team, we were watching it. I was waiting for indications of a reversal. Once we got that, we were able to make money as this thing sold off. As from its highs that it made to its lows that it made, it sold off 44%. I caught about 17% of that. Again, I'm not a perfect trader. I did it with about 22K and I made a little bit over $5,700. So it was a very successful trade percent-wise, but a very risky one, which is why I managed my position or managed my risk by managing my position size. But what caused, again, so much momentum for Root? Root, again, for the first time ever, reported its first ever net income profitability milestone. This was a very crucial moment if you guys could remember back to when Tesla first ever reported actual net income. What that means is that it actually brought in more than what its expenses were for that given quarter. Believe it or not, a lot of these publicly traded companies that are worth billions and billions of dollars don't actually make a profit every single quarter because they could be, reinvesting so much into their company, whatever their case might be. They're investing into growth. But again, it is a big issue. I mean, Uber is notorious for this, where they are losing like $8 to $10 billion every single quarter in running their business, right? It almost doesn't make sense. People like you and I would never be able to do that because we don't have a never-ending bank account, right? But again, it's definitely very different for these publicly traded companies that could just continue to get money poured into by huge investors. So on Thursday, the morning trading session for the auto insurance platform achieved its first ever net income profitability, both a quarter to date and year to date basis. As of Q3, expenses retreated during this quarter. So what the company ended up doing was they ended up reducing their debt. They did like a refinance in their debt. They reduced it. So therefore their interest payments were reduced by 50%. This was huge because there was a very low expectation of what they were going to do for their earnings per share. They had an expectation of being in the negative, and they actually reported an earnings per share of $1.35. That is blowing it out of the water when they have an expectation of you losing money for their earnings per share, but you actually make money, and not just a little bit, $1.35. That is a huge beat. And revenue was $305.7 million versus the expectation of $266.5 million. So again, a huge beat once again. The total expenses fell from $271 million from $285 million from the previous quarter. Again, being able to slim down on those interest payments by being able to reduce their debt. During their post-earnings conference call on Wednesday, the co-founder, CEO, Alex Tim said Root now can invest its profits into growth engines in both direct and partnership channels with indirect during the quarter, and we will continue to expand and test in new areas of marketing funnels, and we expect to continue in the quarters ahead. So pretty much they have enough money now, as they are now in the green, to invest into growth, which is a great position to be in. Now, do not get me wrong. I just wanted you to understand why. Why was there such an extreme example? The biggest thing that I can express to you is that it was a huge beat because for the first time ever, they still were expected to lose money per share, but they actually made money for the first time ever. So this is a pivotal moment for any company that is publicly traded. Now, does this justify a 191% rally? Of course not. But of course, when momentum and hype get factored in, it's hard to stop a very aggressive pump. But just like we've talked about it before, anything that pumps 100 to nearly 200% and then it begins to trade sideways, it's only a matter of time for it to peak and then begin to correct itself. So now it is in a good position, and now it did correct itself a decent amount where we will begin to see, are we going to continue to grow from here because now it's a profitable company quarter after quarter, or does it still have some corrections to do? That is what I wanted to share with you today, because as everyone just talks about, oh my God, this stock gained 191%, but there is no context behind it. You have no understanding of, okay, do I want to short this stock? Do I want to go long on this stock? I don't know what this stock is. It's an insurance company that reported its first net income per quarter in its history. And because of that, the market overreacted in the positive. But it is still a very pivotal time for this stock itself. So we will see how it continues to trade moving forward. It's going to be very interesting to kind of look back maybe 3, 6, 9 months from now and ask ourselves, hey, where is Root trading? Is it back in the hundreds? Is it trading in the 80s? Or is it back at $40 or $30 per share, right? This is one of my favorite parts about the market, is that you get to choose to pay attention to companies that you see value in. And it's not that you have to invest in them, but you can simply even add them to your watch list and follow up with them when it makes the most sense to you. Also, for those that are not aware, there were a series of economic reports that were released today, such as the unemployment rate that actually came in at 4.1%, which was as expected, and the ISM manufacturing index, which actually showed that we came in a little bit lower than what was expected, or when it came down to prices, we came in a little bit higher, showing that inflation is still present. The only other thing that I want to share with you is non-farm payrolls. We came in at 12K, and non-farm private payrolls came in at 28K. Pretty crazy. That was one of the lowest non-farm payrolls I've ever seen, at least based off of recent months. So we'll make sure that we keep you guys posted. I know that, again, as of right now, there's a lot of excitement to see where the market goes. And if you look at the market on this 30-minute time frame, this is what I really wanted to share with you guys, is the market is oversold enough that it could begin to recover. But, if you look at the larger time frames, we're at a major support. Market's been incredibly bullish. So again, the bulls just always have the upper hand when it comes down to this. But if we do break support here and we don't begin to show signs of recovery, if we break the support, then be ready for some sell-in pressure, right? NVIDIA doesn't report earnings until November 20th. So we have some time until that is actually reported and potentially saves the market. Until then, let's take it day by day, week by week, and pay attention to the support and resistance zones and to see where the price action takes us, right? It doesn't matter what indicator we're paying attention to. What matters most is, again, the trend is your friend. What are the prices telling us? Are we moving up, or is there fear, and are we going to begin to move down? So I'll make sure that I keep you guys posted. Again, these are topics that we talk about every single morning within our live session. And whenever it is that you are ready to watch me trade live every single day, it's the second link in the description down below. And we have a huge discount for you, so you can sign up today and watch me trade live as soon as Monday. Like always, let's make sure that we end the year on a green note. Take care, team.